Good morning and welcome back to Almus Market Mornings. Another week which has put a lot of stress on markets is concluding, and the anxiety of the weekend is beginning. This time around, just like the past, there is a lot of optimism about a peace deal. The president has constantly played the good cop, bad cop himself by being positive about a deal, at the same time making aggressive statements on war. Yields cooled off in the last two sessions. Risk sentiment has been slightly better. Amidst all this, RBI has intervened to prop up the rupee yesterday, with the USD/INR hitting a low just about rupees 96 before bouncing back. Statements from Iran are also volatile, with some reports saying the supreme leader isn't looking to give up enriched uranium, plans to charge tolls in the strait with Oman. At the same time, most recent commentary that US proposal has narrowed the gap. So fluid statements everywhere. For us in Almus during volatile times, we look to JK because he is usually the cool one in the room. JK, good morning. Give us some wisdom for this weekend. I mean, the updates on war seem to be all over the place. Do you think we are closer to a peace deal than before?
Good morning, Swaraj. Unfortunately, no crystal ball here, except, you know, um the real progress, if any, is only known to the inner circle in both Iran and US. And it's very difficult now, going by our recent experience, to go by whatever headlines that are coming through. Uh, at the same time, one difference I'm seeing is that, there are statements now coming from uh, Trump's other close aides. Like we had a statement from Vice President Vance a couple of days back saying that the progress is being made. And then yesterday we had a statement from Secretary of State Marco Rubio that some good signs were seen in the talks. And he said a diplomatic deal between US and Iran is possible, but it is unfeasible if Tehran continues to block the free flow of oil on the Strait of Hormuz. So, key point is, the agreement about the Strait of Hormuz being freed, and from the Iran side, the reparations which they have been demanding. But if you look at yesterday's movements, again, big headlines were moving. There was a statement from one of the from the Iran supreme leader that countries near weapon grade uranium must remain inside Iran, and the reaction of the oil prices were immediate, rising by about 4%. But in the US session, the oil prices actually collapsed, retracing all of its gains when there was a report about a final draft of agreement between US and Iran, mediated by Pakistan, had been completed and is being exchanged. Now, if you look at the draft itself, the key point that I am observing is that there is no mention about the nuclear weapons or enriched fuel. There is more mention about lifting of sanctions on Iran in a gradual manner, and freeing of Persian Gulf and Strait of Hormuz is guaranteed, and a joint monitoring mechanism. And also, all types of attacks will end. Ceasefire will be there on all fronts. One important point that I also saw is that Iran's president is also leading an effort to restrain IRGC from overstepping on political and diplomatic policy making. So, even when there is an administration is going, smoothly on negotiations and trying to have a conciliatory effort, the other groups, militant groups in Iran, are not are opposed to it, and that has been a big stumbling block for achieving this peace agreement. So I keep my fingers crossed. There are some signs that it can proceed, but I think we'll have to really wait and see whether it really happens or not. Markets have, of course, taken it with both hands because yields, which had gone up once again during the European session, retraced all of it. Now again, they are trading. They are definitely trading about the big resistances at 4.60 on the 10-year, and also the 30-year trading well above 5%. But at least they have cooled off from the highs, and that is what is giving some comfort. And even equities have gained after being in the negative. Dollar after gaining in the European session again gave up those gains and holding on to the lower levels now. Uh, so I think market is waiting for the next development, and oil price remains volatile. Still looking at the headlines, so we enter the weekend with some hopes, maybe, but not really looking to position ourselves to that extent because of the uncertainties and also the scope for disappointment, which always exists. Economy side, we had quite a few data in the last couple of days, which probably puts the rate hikes by central banks on, some sort of a hold, because we had very poor employment data from UK, similarly from Australia as well. Australia has been raising rates last 3 months, but they might want to watch because of the slowdown in the employment situation, and also their inflation expectations are now showing slower. Japan's CPI today morning came lower, and similarly, even in UK, the headline inflation was lower. Perhaps these will go up as oil price impact, is reflected in coming month. But so far, there's not been major concern. The PMI surveys also showed the overall economic activity contracting in Europe. So it's only the US data that has been holding up well. So there is a likelihood that, if there is perception of a peace talks progressing in the Middle East, central banks might well hold off on their planned rate hikes in the upcoming meetings. And even US, though the data is holding up, they could well choose to wait, because not only because the oil price drop might bring down the inflation, but also because their concern is equally on their finance cost, on maintaining the huge amount of debt that they have to service. So they have to keep both in mind, although the unemployment concerns are now somewhat reduced. So wait and watch for the global markets and for real progress, or status quo to continue. Will Probably most market will go with a neutral position into the weekend. India, we saw a repeat of the act by RBI, which was seen last year, intervening just ahead of the market open. To good effect, of course. Dollar Rupee, which was which had closed higher on the previous day near 96.80, actually traded below 96 in early morning trade just before the market open. And the difference this time was that it did not recover too much. We did see it bounce back to 96, 30, 40 levels, but then RBS intervention had continued. One of the reasons why this time the effect was sustained is also because it was combined with some media reports saying that RBI is now looking at various measures, including a rate hike, to arrest the further fall in the rupee. Although that is debatable, because rate hike is not just from the point of view of currency, may not be preferable, because that will also affect the businesses. We already seen Indonesia raise rates by 0.5% couple of days back, and they openly mentioned about defending their currency with a higher interest rate. But then today, Indonesian rupiah has weakened back to the level where it was before they hiked the rate. So I'm not sure the rate hike will work, but other policy measures, particularly to invite more investments, etc., might be on the anvil. We also saw RBI board approve a record dividend to the government up to 3.3 trillion rupees. And this, of course, is going to ease a lot of fiscal strain on the government, which has arisen because of the Middle East war, and also higher oil price, having to support the oil marketing companies who are bearing a brunt of the losses. So the rupee, again, waiting to see whether there is further action from RBI, whether there is a weekend. Of course, as much as we await the developments in the global scenario during the weekend, we also await what comes out from the authorities in India. As I've shared earlier, their actions on policy front as well as intervention more effective only when the global situation is also supportive. Otherwise, they will hold off because with if the global situation remains bad and they take some policy measure, that could lead to a failure, and they will be left with less tools going forward. So that is what the timing of their effort, particularly on the policy front, will be very important. In the meantime, I think probably Rupee will probably hold the range. Demand could be much less probably awaiting further developments. And of course, since we are already at a very key level at near, not far away from 97, market will be hesitant to cover too much of imports also at these levels. So it's a wait and watch all across. Thank you.
Thank you, JK. And yes, so geopolitically, we are at a tentative situation. There is some optimism going into the weekend that there may be something that may be developing, as per Trump's aides at least. That's what the perception is. But markets are being whipsawed. The uranium point by the supreme leader spiked up the oil prices, and the final deal conversation cooled it off. So as of now, it's all over the place. There needs to be some significant updates. Even yields that have cooled off, but they are still trading above key levels. Like for the US 10-year, that's 4.5. For US 30, that's 5%. So they are still above that, but there is a cool off in the midst. Apart from that, we did see rupee strengthen yesterday due to an intervention. But interestingly, the effect is sustained because there's a perception some other measures could also follow. So that's about it. We will catch up on Monday with the fresh round of updates. Thanks for listening.